Stocks see some green on positive global cues with financials and oil and gas leading the charge even as realty and healthcare drag mid-caps underperform.
ICICI Bank beats profit expectations while SBI Life Insurance ekes out better than estimated margins. But HCLTech turns in weaker than expected growth in margin numbers. Guidance as well was muted.
EU Small Finance Bank perks up on universal banking hopes following release of RBI norms, and IREDA gets Navratna status boost, but BSE sulks on a revision of its fee payout to SEBI.
Prime Minister Narendra Modi tells News 18 in an exclusive interview that he aims for the solar panels in every home to bring electricity costs down to zero, even as he disses inheritance tax as an idea of others.
A very good afternoon. You're watching Halftime Report on CNBC-TV18. I'm Ekta Batra, and with me is Mangalam Malu. Well, it is turning out to be a day where we have started on the positive notes. We have the Nifty, which is higher. We have the mid-caps, which are consolidating, and the Bank Nifty, which is really stealing the limelight today. So that one is outperforming. But nonetheless, it's a stock-heavy day, stock-specific day, Mangalam. And I think after a long time, the frontliners are dominating in terms of news. So we have Maruti, HCLTech, ICICI Bank, Apollo Hospitals, just to name a few from the frontline indices. And we will be talking about a lot of the broader market stocks such as BSE, IREDA, all of them which are in focus. Results today, Ultratech Cement, Trent, Tata Chemicals, so do watch out for that. So that's what's taking place stock specific today. We do have a truncated week, or rather you'd have to say a midweek holiday today. So, but it'll be important because we have the FOMC meet, which is on the 30th of April and the 1st of May. So it'll be an important holiday as well for us.
Totally agree with you, Ekta. It's a market which is extremely stock specific, but no real concerns. The Nifty is up around 150 points. The Gift Nifty indicated a 90-point uptick. We saw that 90-point uptick, saw a bit of an uptick thereafter as well. A dip, as you can see at the intraday chart, around close to 930, around 10, and thereafter it's only been one way up. Will be very interesting to see where the Nifty Bank goes now. The Nifty Bank is closing in on the heels of 49,000. ICICI Bank has supported it on the way up, along with some respite coming in from HDFC Bank. And tomorrow is an important day for financials. Like you said, it's a holiday on Wednesday. That implies that tomorrow will be a clubbed expiry of both Nifty Bank and Nifty Financial Services. And HDFC Bank is the common factor in both these indices. So it'll be extremely important to track how that pans out. I'll be more interested to see Trent's numbers today. And largely because it's been such a big outperformer in the last 1 year. The stock has rallied about 215% in the last 12 months and outperformed its peers like Aditya Birla Fashion as well. And a lot on the street are expecting this outperformance to continue given the growth runway that the company has. But in terms of valuations, does not have as much headroom. So if you just pull up a 1-month comparable chart of both Aditya Birla Fashion and Trent, you would see that ever since the demerger announcement that came by for Aditya Birla Fashion, that stock in the month of April so far has rallied about 32%. That's the graphic telling you 37% in the last 1 month or so at the high point of trade. This is Aditya Birla Capital. I'm talking about Aditya Birla Fashion. So Aditya Birla Fashion and Trent come together on the screen. You will see that this month Trent has underperformed Aditya Birla Fashion. But for the last 1 year, you have a big outperformance coming in from Trent. So that's this, chart that I'm talking about. Trent this month 9%, ABFRL 32%, whereas the last 1 month ABFRL 22% and Trent 215%.
Okay, all right. So maybe there's a little bit of catch-up which is taking place at this point in time. But Trent will be an interesting set of numbers as always to watch out for. But the other interesting set of numbers, and I think what stood out was the slippages falling 10% for ICICI Bank, is ICICI Bank. That stock is at a 52-week high on the back of its Q4 numbers. Abhishek is here to tell us about the earnings fine print.
Well, Ekta, to begin with, ICICI Banks, the numbers have beaten our poll. However, the core operating profit growth continues to be lower than loan growth. But what stood out in this quarter for ICICI Bank? Deposit momentum. At a time when liquidity is tough in the, overall industry per se, deposit growth for ICICI Bank has bounced back to a 3-year high. So loan growth YOY is the weakest in last 12 quarters and weakest in last 11 quarters in terms of sequential loan growth. Operating profit growth is at just 8.8% YOY, which which is perhaps the weakest that you are seeing in last 11 quarters. Cost to income ratio, operating efficiency has improved. It is at 5-quarter low of 39.2%. Asset quality, both the gross NPA ratio and the net NPA ratio are perhaps one of the best that you are seeing in last 1 decade or even more. Gross NPA ratio is down to 2.16%, net NPA ratio down to 0.4%. Now deposit growth, that's the key point over here. 12-quarter high in terms of YOY and quarter-on-quarter growth. 19.6% YOY growth in deposits and about 6% sequential growth in deposits. That's what actually pleased the street. Subsidiaries PAT on a quarterly basis has crossed the 2,000 crore mark. This time it was led by ICICI General as well as ICICI Securities. And the risk in the balance sheet is perhaps one of the lowest that you are seeing in last 9 to 10 years. Risk weight asset to advances ratio is down to 102.9% versus 114.9% in the previous quarter. Now, our poll was of 7.5% growth in NII. It has come in at 8.1%. So there is a beat on the NII, and PAT is also a beat given the fact that provisions were down both YOY and quarter-on-quarter. Back to you.
Right, Abhishek, thanks a lot for that. That's about ICICI Bank up around 3% as we speak. But MCX is down 2%. More importantly, BSE is down 12%. And this is not a stock that you see, falling in double digits. In fact, this morning when it was down closer to 18%, it was the biggest intraday fall that we've seen in the stock ever. And that's on account of the regulatory fee that has been imposed on them by the SEBI. Vamakshi joins in to tell us more about this and how it could impact their businesses. Vamakshi.
Well, absolutely. Both of these counters are under pressure today after the regulatory setback that the companies have seen. The companies have been asked to pay a regulatory fee to SEBI based on annual turnover calculated on the notional value of the options contract. Now, notional value being the key word here, given that the companies were earlier calculating the annual turnover based on the premium value for the options contracts. Now, just to give our viewers some perspective, let me break it down with the help of an example. Now, for instance, consider a call option with a lot size of 10, strike price of nearly 1,000 and premium of 100 rupees. So if you buy one lot, the premium turnover, which is the premium into the lot size, which will stand at around 1,000 rupees. Now, earlier the regulatory fees were calculated on this premium value. The notional turnover, on the other hand, is equal to the strike price plus the premium into the lot size, which brings it to almost 11,000. And SEBI says that the regulatory fees should have actually been paid on this value. So definitely the notional turnover is much higher as compared to the premium turnover, and therefore some differential fees are being demanded. BSE is expected to pay 165 crores, while MCX is expected to pay nearly 4.5 crores. Jeffrey says that the higher fees could hit the overall EPS for BSE by almost 15 to 18%. They've gone ahead and downgraded this rating from buy to hold and lowered their target price to 2,900 to account for this. While on the other hand, Morgan Stanley believes that the differential fees are expected to account for only 1% of the FY25 PBT estimates for MCX. They've given an underweight call, target price of 2,100 per share. But largely, this regulatory setback is driving both of these counters under pressure today.
Okay, all right, Vamakshi, thanks very much for that. Well, some news with regards to the hospital rates case. Associations of Doctors Hospital has moved the Supreme Court against the rate fixation or the possibility of a rate fixation. So that is news. We already know that Mangalam, they have been looking to actually contest the possibility of any kind of rate fixation in the hospital industry, and the Supreme Court has agreed to hear the plea against a possible rate fixation. Remember, there's no fixed rates right now. The Supreme Court has said in case there is no kind of adherence, they would probably subscribe to moving to institutional rates. So that's the...
It should come as a bit of a relief that the Supreme Court has at least agreed to hear.
It's already known. We already
right.
knew that a lot of the associations are already moving against it. There were many of the associations such as Nat Health, etc., which had already moved against it. And hence, all of this was already in the background. And let's see, it's going to be a moving story. And most of the opinion, most of the opinion is that it's not going to, you're probably not going to hear anything substantial till the elections are over. So this is something to watch out for. But definitely, Supreme Court did next hear the case on the 10th of September. So this is definitely pulled out. And the only thing is that whether or not companies are going to go ahead and be aggressive when it comes to capex or deals within the hospital space, as much as we saw last year, because that was one of the most successful years in terms of M&A for hospitals, in terms of private equity funding also. Whether they're going to just be on the sidelines till they get clarity on this is something that which would be a trend which one would probably watch out for emerging in this.
All right, so that's about the hospital space. As of now, it's par for course. This was underway. More clarity will emerge perhaps on September 10th, and until then, we will await any developments in the hospital space. Speaking about that development itself, we had a deal that was announced over the weekend in Apollo Hospitals, as a result of which is down about 6%. More on that later. But let's talk about HCLTech. That also is among the top losers on the Nifty today, on the back of a disappointing set of fourth quarter earnings coming in, along with weakness in the management guidance as well. In fact, brokerages also are not particularly happy. Rima joins in with what brokerages are making of it.
Thanks so much for that. So as you pointed out, Q4 was subdued and the FY25 guidance was much lower than street expectations. The company is now calling out a revenue growth of 3 to 5% in FY25 versus street expectations of 5 to 7%. Therefore, brokerages have also brought down their own estimate. So Kotak and Nomura, they were earlier anticipating FY25 revenue growth to be closer to 6.5 to 7%. Now they're saying growth estimates have brought down to 4 to 5%. The key reason why HCLTech management has guided for just 3 to 5% revenue growth. Two impacts. One of the large projects has moved offshore. Now, offshore rates are much lower than onshore rates, and that is impacting the revenues. Two, there is also an impact of 80 basis points that they see in Q2, that's in the September quarter, due to an exit from a JV that they did with State Street. So those are the two reasons. Also, HCLTech will be one of the few companies where FY25 growth is likely to be lower than FY24. Margin guidance stays at 18 to 19% for FY25, but in a conversation with us, they said that their margin aspiration of 19 to 20% has been pushed out. MK, HSBC have both downgraded the stock. Jefferies has a hold rating on the stock. They say weak growth caps the upside, but a high yield limits the downside. Nomura, Kotak have lowered the target price on the stock. Back to you.
Okay, all right, Rima, thanks very much for that. In fact, we did catch up with the management and ask them about the FY25 guidance and the growth leadership target. Listen in.
In FY23, we had the highest growth in services. We had the growth leadership in the industry. 24, we maintained the growth leadership. And I'm pretty confident that we will maintain the growth leadership in a handsome way this year as well. We've done $2.3 billion of booking this quarter, a bulk of which will translate into revenue in Q2. And we remain confident of growth in Q2 and the subsequent quarters, which should nicely help us deliver the market leadership on the growth.
Last 2 years, if you see FY23 as well as FY24, we have given the guidance of 18 to 19%, and we've delivered exactly the same number, 18.2% in both those years. So given the environment that we are currently going through, I think that's the right range for this period. The aspirational range of 19 to 20% that we have talked about is a little pushed out right now. But our efforts are always to sort of get back to that pre-COVID kind of a range that we talked about.
All right, so let's move on from HCLTech and talk about AU Small Finance Bank. That's surging in trade today. They've got a universal banking hopes following release of the RBI norms. Abhishek joins in with the details of this one. Abhishek, stock about 3.5%. What does it mean?
Well, RBI has opened doors for SFBs to apply for a universal banking license. So the eligibility that RBI has mentioned is that a satisfactory track record of performance for a minimum period of 5 years, should have net profit in the last 2 fiscals. The shares of the banks are to be listed on exchanges with a net worth of about 1,000 crore is what RBI has mentioned. Along with that, the gross NPA ratio and net NPA ratio should be below 3% and 1% respectively over over the last 2 fiscals. And, eligible SFBs having a diversified loan portfolio, this is a key criteria which Ujjivan doesn't meet due to the fact that about 65 to 70% or more is the MFI portfolio in Ujjivan. So the SFB should have a diversified portfolio in order to apply for that. So the most likely candidate for this application would be AU Small Finance Bank. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's the update coming in on EU Small Finance Bank. Well, for the markets, mid-caps are consolidating, good advance decline ratio. We'll take a short break, but on the other side, we're going to continue our focus on specific stocks. We have Gurmeet Chadha of Complete Circle who will join in to give his views on a lot of these buzzing stocks. Stay tuned.
Welcome back. We've addressed a bunch of stocks which have not been doing well from the frontline space itself. And now let's talk about Apollo Hospital. It's actually among the worst performing stocks on the Nifty today, down almost 6%. At one point was down a lot lower as well. This is a special segment called Insight Edge. Ekta joins in to talk about not just the deal, but what the company said to us that has the stock moving the way it has as well. Ekta.
Yes, Manglam. Well, interestingly, the stock has recovered, but the concerns continue. They, remember, had a call on Saturday afternoon to address questions from investors. But nonetheless, now, one of the key concerns with regards to the Apollo Hospitals deal is that it is basically a complicated deal which has taken place. Jefferies says that Apollo Health Co. will need strong execution given the complex structure. Now, there is also a related party transaction as KeyMed, which is going to be merged into Apollo Health Co. over the next couple of months, is a promoter entity. Now, all the other sore point is that the deal valuations are lower than expected, so which is Apollo Health Co. CLSA says Apollo Health Co. is at a discount of around 5,600 odd crores compared to CLSA's valuation. Jefferies says Apollo Health is valued at around 14,478 crores, which is lower than their 17,000 crores SOTP valuation. Now, Sunita Reddy did mention to us that the valuation, yes, of Apollo Health Co. is at a discount of around 20% than market expectations. But it will do, the deal, it will form India's largest omni-channel play, and the timeline of the deal, according to them, was crucial as well. Now, the other key concern is the margins. KeyMed margins are only 3.6% for FY23. Sunita Reddy has indicated that they will improve their margins to 10 to 11% versus, the guided 7 to 8% by FY27. The other thing is revenues. Now, they're targeting 25,000 crores in terms of revenues with 7 to 8% margins by FY27. The street is anticipating that they're probably going to go via the acquisition route, and that's exactly what Sunita Reddy said, that the KeyMed will look at an inorganic growth to touch that 25,000 crore revenue mark by FY27. So I think execution of all of these targets, improvement of margins, revenue, all of that needs to come through for the street to believe that this is actually a deal which is good enough despite the complications. Now, brokerages, a bit sanguine. So Morgan Stanley is overweight, target price of 7,181. They believe deal valuations are lower than expected for AHL. We have the likes of Nuvama, which maintains a buy. Target price is lower to 7,300 versus 7,500. AHL valuation is a letdown at 1.7 billion versus estimated 2.7 billion. Doubling of KeyMed's valuation in a year is aggressive. Fundraise, which is a positive, fundraise will minimize the 24/7 cash burn. But overall, they're reducing their pharmacy target valuation from 25 times EV to EBITDA versus around 22 times, and the SOTP valuation at by around 290 rupees per share. We in fact did speak to Sunita Reddy in this, so let's listen in to what she had to say in our Insight Edge segment.
We now will have a very strong balance sheet which will enable the growth of Apollo Health Co. And if you look at the entire transaction, it will create India's largest omni-channel pharmacy play. Added to that, of course, is the benefits that will now come from the digital network that we have created, which has multiple revenue streams. So we are enabling growth, we are funding growth, and we have a strong balance sheet, it could be at a 20% discount to market expectations. But I think having cash in hand and a strong balance sheet far outweighs that. Current margins are at 3%, but I think as we go forward, we have to look at the scale of KeyMed and the fact that it supplies to 70,000 pharmacies. We believe that private label is the right way forward. So if you look at combination of both what we're doing, AHL offline and KeyMed, we're able to deliver a 10.7% margin, moving into 11%. And that with the significant scale is actually a good number. I think KeyMed is looking at some inorganic growth, and that will enable it to grow at around 20%.
All right, so that was an entire 360 coverage on Apollo Hospitals. Let's bring in Gurmeet Chadda as well of Complete Circle Investments joining in. Gurmeet, good afternoon. Thank you for joining in. We've heard Ekta, we've heard the management, we've seen the stock price move, you've read the details as well. In the past, you've liked Apollo Hospitals. What are your thoughts on this deal and what's the future looking like here?
So, the two legs of it, Magla, one is the street is on the relative valuation, I think where probably the street is a little discounted. I think it's probably 20-25% lower as per various SO2P models used. Second is that, the concerns on related party and this being a slightly complicated deal, happening in two legs. I think that's where the street is little worried. Plus, valuations have been very expensive for hospitals. Look at the EV by EBITDA for most of them, including, Max as well as Apollo. I think barring Narayana Hrudayalaya, which we like it, and the valuations have been stretched. So I think it was a bit of a disappointment there. But I think an integrated play with hospital and pharma distribution could not be bad in the long run. So if you see, for example, in US, there are just hardly 3-4 pharma distributors. India would probably have 40,000 wholesale distributors of pharma. So there will be some consolidation in this and stronger players will emerge. We recently saw one listing, if I remember correctly, the name was Hetero, which was the largest pharma distributor. So I think in the long run may not be that bad, but I think they'll have to demonstrate. In fact, my view is that the related party transactions will actually come down with this integration. So if they can demonstrate that these two concerns on related party transactions, on capital allocation, if they show some incremental increase in margins, I think the stock should do okay. A 4-5% reaction isn't much.
Okay. But do you think, Gurmeet, these hefty targets of 25,000 crores in terms of revenue, margins of possibly even increasing to 10 to 11% versus 7 to 8% are feasible?
Looks aggressive, Ekta, to be honest, but we are in a bull market, so I'm not surprised with a lot of the guidance coming these days. But I agree with you. It's slightly aggressive.
Okay. Well, the other one which I just wanted to point out is ICICI Bank, because the slippages look good for them this quarter, asset quality, and that's probably holding up the stock with a gain of around 3-odd%. How do you read the earnings and what's your call?
Very, very, very solid set of numbers, and what a change in leadership. We've been talking about this. Great credit growth, deposit growth. Very, very happy with seeing. Also, a bit of a March phenomena as well. And I think one thing which has happened at ICICI, while we keep discussing numbers, Ekta, is the change of culture. One of the only banks which have removed product-wise targets. So they have the lowest branch attrition. If you go, level 2, level 3, there are no separate insurance targets, for example. The branch has to achieve profitability through various product lines. You can do it through CASA, you can do it through cards, you can do it through FX, you can do it through trade finance. So what has done is it improved the customer satisfaction level and internal employees. One problem with a lot of other private banks have been the sheer pressure branch has on distributing third-party products. And I think it's played a very, very big role in aligning to. And I think on tech, they have demonstrated leadership. I think technology-wise, I've been a user on company and individual side. It's been a remarkable. I think they're very ahead digitally. We also use them as a depository in our PMS. So I think NI, great growth, great asset quality turnaround. So financial metrics, I think, is industry leading, and I think the market is clearly rewarding. I think Axis and ICICI will remain the leader in this bull market.
Right, Axis and ICICI will remain the leader in this market. But speaking about this space itself, Gurmeet, HDFC Bank has been an underperformer. You have liked it, so I wanted your thoughts on that. Alongside the risk of regulatory action, Kotak Mahindra Bank had that accident last week. We have Bombay Stock Exchange as an accident today as well. So all these places are, while they're making money or have made money in the past, they're fraught with all these landmines. How do we navigate through these?
I think the only solution, Manglam, is diversification. And I think BSC, I was fearing something coming in. Look at the derivative. Look, forget about this. I'm actually surprised. NSE does it on notional value. I don't know why BSC was calculating it on the premium value. It's a little surprising to me, but it will have a 12-15% EPS impact because 40-45% PAT comes from derivative. Also, I think there could be, right now the reaction is 12%, let's say what I'm seeing on the screen. SEBI is very, very concerned on derivative volumes. Cash to derivative to cash volume is 400x. Used to be 3 or 4x in 2010 when we became more active in the market. In US, for example, the derivative to cash is 70%. India is 99.5. Somebody actually remarked, I think in one of your shows, that from a tool of risk, tool for hedge, this has become a tool for risk. I think there'll be something also on derivative volumes. I think the regulator is very, very concerned. And that's where these high multiples can come under question. You can't have these, it's a great business, fintech business, asset light, but you can't be trading at 90, 100 times earnings. I think that's way too high. So I think the next risk could be the derivative volumes, in my view. And look at the number of accounts which we have added post-COVID. 6-7x of what it was pre-COVID on traders. So that's something I would like to watch out for before really jumping and buying this too.
Okay, all right, Gurmeet, we're going to let you go on that note. Thanks very much for joining in and giving us that perspective. So that's a whole host of stocks that Gurmeet did speak about. Well, Apollo Hospitals, just look at the kind of intraday recovery that we've seen for that particular counter. It's now just about down by around 3.5 to 4% odd. So I think maybe there is some kind of positivity coming in about, what the Supreme Court details are on the rate fixation, because that's the only incremental piece of news that we've got as of now when it comes to the hospital space. The other ones should come up for you, Narayana as well as Max, all of those stocks. Maybe an intraday chart should tell you more in terms of how they've reacted. But both those stocks are a little weak, on the weaker side, so down around 1.5% for both those counters. Max Healthcare, Fortis, all of these counters should come up for you. The next hearing will be the 10th of September, but maybe there is some amount of optimism that the bodies would act strongly against it. But we need to take a short break. As we do that, we have an announcement to share with you all. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than the top market expert Nilesh Shah, MD of Kotak Mahindra EMC, who will answer all of your questions on managing your finances and also conducting a special masterclass on what not to do with your finances and the mistakes to avoid. CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy will also feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on 11th of May, 9 a.m. We have limited seats. Scan the QR code on your screens to register. Welcome back. Well, let's talk about the news with regards to the hospitals. Association of Doctors and Hospitals have moved the Supreme Court against possibility of fixed rates. Ashmit joins in with details on this. Ashmit, go ahead.
Well, this is an important matter where a PIL had been filed, which essentially had claimed provisions under the law that sought for a certain band of rates to be prescribed for various hospitals. Now, what is important is that today we saw a whole host of petitions being filed by various associations of doctors as well as hospitals who have challenged this PIL, and not just challenged, have challenged the provision under law that provides for this part. This provision that we're speaking of is essentially Rule 9 of the Clinical Establishment Rules of 2012. Rule 9 of Clinical Establishment Rules essentially provides the center the power to prescribe a range of rates for hospitals. Now, this was fairly contested by doctors as well as hospitals. In fact, they argue that if such a policy is implemented, then investors, especially in the healthcare space, bringing big tech to Indian healthcare picture will not happen. Investors will be wary if such fixation of rates is allowed, saying that we cannot have a one-size-fits-all approach as far as the healthcare space is concerned, that the Rule 9 has been challenged, that there is no valid path that the center can exercise for going ahead and for fixing such rates. In fact, even going on to say that while the medical profession invites more regulation, there is no space available for such fixation of rates. Prima facie, the Apex Court made some interesting observations. Number one, the Supreme Court observed that, questioned this power that is available with the center for prescribing uniform rates. Went on to say that rates are a function of market forces, that one doctor may charge 100 rupees, the other may charge 10,000, saying that any fixation of rates could possibly lead to underhanded practices, and also, in fact, question the lawyers if the lawyers on their part would welcome such fixation of rates. So strong line of inquiry here by the doctors, prima facie observations here by the Apex Court. The Supreme Court for now has resisted from taking any measure one way or the other, has asked for the central government to come back to this petition of the doctors, has sought a response from the center, will next hear this case on September 10th.
Right, interesting comments coming in from the Supreme Court out there, and important ones as well. You know, what stood out, Ekta, for me was that the Supreme Court saying that if there is a fixated price, then hospitals may perhaps resort to some underhand activities, etc. as well. So maybe valid points there.
Yes, absolutely. You know, there could be lots of permutations and combinations if in case there is fixed rate. We ourselves could not develop in terms of technology because, you know, a robotic surgery itself costs so much now. If those kind of rates are fixed, you won't even be able to, you know, probably afford a robot when it comes to surgery. And that also has impacts on, say, medical tourism into the country, which is also picking up. So there are
that the Supreme Court would be walking, right? On the one hand, you have all these advanced technologies and the prices that they would be charging for this. And on the other, you'll have a large population which cannot afford basic
absolutely. That is the dichotomy of the Indian healthcare system, which I think we've been battling forever. But that is, you know, the point of fixed rates is exactly that. But nonetheless, ahead of the analyst call tomorrow to discuss Indigo's recent business update, Morgan Stanley today further raised the target price on Interglobe Aviation. So why is the street so bullish? Sonia sir to tell us more.
Well, thanks a lot for that. As you rightly pointed out, you know, the street is very bullish on Interglobe Aviation. The stock is sitting at a fresh 52-week high. If you look at it in the last, you know, in this year, in 2024, the stock is up 31%. Now, there are 22 brokerages that track Interglobe Aviation, out of which 16 brokerages have a buy, 4 have a hold and 2 have a sell. So, as you can see, the bullish bias is very high on Interglobe Aviation. The consensus 12-month target price is 3,730. The highest target is from Morgan Stanley, which is 4,615, and the lowest target is from Incred, which is 2,000 rupees. Now, having said that, why is Interglobe Aviation rallying so hard? Of course, it is a market leader in a growing space, so that is the basis on which the, you know, the up move is happening. But Morgan Stanley has given some very clear, visible targets. They talk about an addressable market that can increase 5 times by FY42 and grow at a 7.5% compounded growth rate. They talk about how India outbound travel will be the next big theme, because post-COVID, we've seen a lot of inbound travel in India pick up in a big way, but the next big leg will come in outbound travel going forward. Domestic and international market is seen expanding from 220 million airline passengers in FY24 to almost 370 million by FY30. We're also seeing a lot of the airport infrastructure expanding substantially. So in 2 key metros, Mumbai and Delhi, there are 2 sizable airports expected for 12 million passengers in Delhi and 20 million passengers in Mumbai by FY26. And this will definitely boost the India outbound travel. Now, for Indigo, there's another thing that's playing out, which is efficiency at scale. Indigo now offers 2,000 plus daily flights, including international flights, with 88 domestic destinations. So there's efficiency at scale playing out, which will help the operational performance as well. Now, Indigo's Q4 earnings are not out just yet, but Morgan Stanley is very bullish. They talk about a revenue growth of 18%. The EBITDA are going up about 59% in this particular quarter, and the profits going up 127%. So they're looking at a profitability of 1,500 crores for Interglobe Aviation. Remember, a couple of months ago, there were two overhangs on the stock. One was the promoter stake sale, and the other one was the capacity addition. Now, both of the stock overhangs is out of the way for Interglobe Aviation. So perhaps there's further blue skies for this particular stock. Back to you.
All right, Sonia, further blue skies for Interglobe Aviation. I flew Indigo this weekend itself. The efficiency and the crowd that is there in the flights both really stands out and tells you that there is indeed a blue sky for them.
The demand has gone up substantially, right? And now because a lot of the other players like Vistara had certain issues, it's just, the incremental demand for Indigo is just substantial now.
All right.
Okay.
We take a short break, come back, we discuss our travel plans in that break, and on the other side, we discuss trades with Ruchit Jain.
कांग्रेस का जहां तक मैनिफेस्टो है इस पर पूरी तरह मुस्लिम लीग की छाप। अगर ईडी सीबीआई से चुनाव जीते जाते तो ईडी सीबीआई का काम तो इतने सालों तक कांग्रेस ने किया है। आज उत्तर प्रदेश की और देश का हाल ऐसा है कि बड़े बड़े नेता लोकसभा के मैदान से भाग रहे हैं, राज्यसभा का रास्ता खोज रहे हैं। एक भी केस ड्रॉप नहीं किया गया। जो अदालत कहेगी वही होगा। अब मुझे देश को तीसरी आर्थिक महाशक्ति बनाना।
It's a good day of trade as we speak. The Nifty is at the high point of trade. 22,565 is here. Alongside that, it is the Nifty Bank which is leading the market higher. So at the high point for both these frontline indices, and this comes as some sort of respite because on Friday's trading session, which is the first trading session of the May series, we saw a decline in both these indices. On the other hand, the mid-cap index, which was an outperformer on Friday, is an underperformer today, though that too has recovered from the low. So currently sitting with a gain of about 0.33%, moving towards the higher end of today's trading range after underperforming briefly. Still not as much as the frontline indices, but not doing too bad. A marginal premium of stocks which are gaining as against the stocks which are losing. So that green line is a little above the red line, and they have been parallel for most part of today's trading session. For the Nifty, however, the question is where next? On the way down, we have strong support at 22,400. That's been established with the kind of put writing that we've seen at the 22,500 mark. But on the way up, there could be some speed breakers around that 22,650 to 22,750 zone. And that's because of the call writing that we've seen at 22,600. And also, we're still not out of the woods as far as FII shorts are concerned. For the Nifty Bank, it's closing in on that 49,000 mark. We've seen a fair amount of writing at the 48,500 and 48,700 put. For the Nifty, the 20-day moving average, of course, of 22,400 also comes in as a handy support. Important stock to track for both the Nifty, Nifty Bank and the Nifty Financial Services, all three of them. We'll watch out for HDFC Bank because the highest weight on all these three indices as ICICI Bank's outperformance has played out in today's trading session. A lot of short positions being added on both Apollo Hospitals as well as SBI Card. So if there's no follow-on selling, then maybe we could see some recovery as these shorts cover their positions. And I'm watching out for Biocon. Has been one of the bigger movers of all of last week. And now with the open interest activity on this stock, it may enter F&O ban in today's trading session. So this is something that we'll keep an eye out on, Ekta.
Okay, all right. Thanks very much for that. And that's the F&O update. L&T Finance, in fact, has reacted very positively post its conference call. See, so maybe the takeaways should come up for you. The stock is up around 3.5% on the back of those conference call takeaways. And we'll probably try and get Abhishek to talk a little more about it. But in the meantime, we have Ruchit Jain joining in to tell us what he's strategizing today. Ruchit, hi. First day of the week. It's a Monday. Markets are doing well. Bank Nifty is outperforming. How would you approach the financials this morning?
Yeah, hi. Very good afternoon, Ekta. Well, I think if you look at the indices, it has been a couple of months where the markets have seen some consolidation, which just seems to be a time-wise correction within an uptrend. Earlier, if you see, start of the March, Nifty was trading around 22,500. We are still around those levels. Although we witnessed some 1,000 point of correction in between that from the highs, but markets have not seen any kind of negative market breadth. In this last couple of months, mid caps have, small caps have outperformed, and now, as you rightly pointed out, that the financials and the heavyweights have started taking the leadership again. So we believe that the downside should be very limited from here on for the markets, and we could see the index approaching the new highs again. So within the financial space, I think banking definitely is taking the leadership. Heavyweights such as ICICI, Axis Bank are showing a price volume action and post their quarterly numbers. And the Nifty PSU banking index that's what we are watching on, because this index has broken its previous swing high. So I think outperformance could be expected from the PSU banking names again.
All right, and individual stocks, if you had to list out two, which ones would they be?
Yeah, so Mangalam, couple of buy recommendations. As we are speaking about the banking and financial, so SBI would be my first pick over here, which of course is a leader, when it comes to PSU banking space. So SBI has shown a good price volume action, is on the verge of breakout after that 2 months of consolidation. So one can go long on SBI over here with stop below 788 for potential targets around 855 in the near term. And BPCL is looking positive. In fact, if you look at all the three OMCs, after that time-wise corrective phase of last 1.5 months, the stocks have not broken their 100-day exponential moving average supports, and they are now on the verge of breakout from this recent consolidation. So I think in the short term, OMCs can do well. So BPCL can be bought at current levels from a trading perspective with stop below 600. Potential targets are seen around 650.
Okay, all right, Ruchit, we're going to let you go. Thanks very much for taking the time out. Time for a short break, but on the other side, we'll get you excerpts from the big News 18 exclusive interview with the Prime Minister. Stay tuned. Welcome back. Well, moving on to the big exclusive interview now. Prime Minister Narendra Modi sat down with Network 18's Group Editor-in-Chief Rahul Joshi and News 18's Networks Vilas Bade and Hari Prasad and discussed a slew of issues making news this season. He spoke about the controversies around the inheritance tax and wealth distribution. Listen in to excerpts from that exclusive conversation.
सैम पिट्रोडा जी ने जो है इनहेरिटेंस टैक्स की बात की, जो हम लोगों की जमा पूंजी है, जब हम अपने लोग पूरा बचाते हैं अपने फैमिली के लिए, जब हम उसको अपने आने वाली जनरेशन को देंगे तो उस पर भी टैक्स लगेगा और ये टैक्स बहुत बड़ा टैक्स हो सकता है. तो क्या आप कहेंगे कि बीजेपी अगर आएगी तो इस टैक्स को कभी नहीं लागू करेगी?
भारतीय जनता पार्टी क्या करेगी, हमारे मैनिफेस्टो में साफ हमने लिख करके लाए हुए. अब उन्होंने कहीं सगुफा छोड़ दिया तो मैं भी वो झंडा लेके घूमूंगा, ये सवाल आपके मन में कैसे आ जाता है? भारतीय जनता पार्टी की विचारधारा साफ है जी. हम अपनी विचारधारा के आधार पर कार्यक्रमों को लेकर के, मैनिफेस्टो को लेकर के देश के सामने जाते हैं. कृपा करके ऐसे महाशयों के विचारों को हम पर मत थोपिए भाई.
मोदी जी, राहुल गांधी ने एक बात और कही है. वो कहते हैं कि जब वो सरकार अगर उनकी आएगी तो वो एक नेशनल एक्सरे कराएंगे. इसी से जुड़ा सवाल है, इसीलिए मैं पूछना चाह रहा हूँ. एक नेशनल एक्सरे कराएंगे. बात सिर्फ कास्ट सेंसस की नहीं है जो कि वो करते आए हैं, उस पर भी मैं आपका मत जानना चाहूँगा. मगर बात वो कहते हैं इससे आगे है. बात कास्ट की नहीं, बात जस्टिस की है. और वो कहते हैं कि हम जो है एक सोशियो इकोनॉमिक सर्वे लाएंगे, एक इंस्टीट्यूशनल सर्वे लाएंगे और उसमें देखेंगे कि किसके पास किस जाति और किस उस वर्ग के पास क्या है, कितना धन है, कितनी इंस्टीट्यूशंस में भागीदारी है, और उसके बेसिस पर हम इस पूरे सिस्टम को रीडिस्ट्रीब्यूट करेंगे. इसको आप कैसे देखते हैं?
सबसे पहले तो इस देश में जो लोग अपने आप को राजनीति के एक्सपर्ट मानते हैं, जो लोग देश के उतार चढ़ाव को बड़ी बारीकी से अध्ययन करते हैं, सबसे पहले उनका दायित्व है कि वो ऐसे लोगों को पूछे कि जिस परिस्थितियों का वर्णन आप कर रहे हो, अगर ये सही है तो 50, 60, 65 साल तो आपने राज किया भाई. ये मुसीबत के जो जन्मदाता आप हो, और आपने अब तक की बर्बादी लाई क्यों? पहले उनका जवाब मांगो भाई। नंबर 1। नंबर 2, एक्सरे का मतलब क्या है जी? मतलब हर परिवार में जाना, घर घर छापा मारना, अगर किसी अनाज के डिब्बे में किसी महिला ने अपने गहने छपा के रखे हैं, उसको भी एक्सरे किया जाएगा, उनके गहने ले लिए जाएंगे, जमीनों का हिसाब किताब किया जाएगा, और फिर उसको रिडिस्ट्रीब्यूट करेंगे। ये दुनिया में एक माओवादी विचार ने सब किया हुआ है, दुनिया बर्बाद हो चुकी है। ये पूरी तरह अर्बन नक्सल उस सोच का सीधा सीधा प्रकटीकरण है, और इसलिए मैनिफेस्टो आने के 10 दिन तक बाद भी ये जो जमात आए दिन लिखापट्टी करती है ना, वो चुप रही, उनके प्रोटेक्शन में चुप रही है। तब मिलके मेरी जिम्मेवारी बन जाती है कि देश को जगाना कि भाई देखिए आपको लूटने की ये तरकीब हो रही है। और दूसरा पार्ट है, डॉक्टर मनमोहन सिंह जी वगैरह, उन्होंने हर बार कहा है कि भाई जो भी संपत्ति होगी इस पर पहला अधिकार किसका होगा। तो हिसाब किताब बहुत साफ है, वो क्या करना चाहते हैं।
Okay, and you can tune into the entire conversation with the Prime Minister at 9 p.m. tonight on CNBC-TV18 and Network 18 channels. All right, time for a break now, but on the other side, Manisha Gupta will join in to take us through what she's tracking in the commodity space. Stay tuned. Welcome back. Well, for the markets, it's doing well. We have no complaints coming in. The advanced decline ratio is positive as well. We have the Bank Nifty, which is up around 1.6%. IREDA is one of the big stocks of the day. Remember, it's gained around 36% this month itself and 79% this year. We have NBCC, which has done well as well, so up around 5% for that particular counter. But now let's go across to Manisha Gupta to take us through what she's tracking in the commodity space.
Thank you so much for that, Ekta. And joining me is a very special guest, Martin van Leeuwen, is CEO Research at International Zinc Association. Martin, hi, welcome to CNBC India. And it has been a great previous quarter and the month of April as well as far as the base metal prices go. And zinc is no exception, because for the month of April, we are up by nearly 13 to 14% in case of zinc prices. What do you think is really fueling this fire, and how are you looking at the zinc demand globally?
Well, zinc is in a very good space at the moment. It's picking up demand again, and that's mainly caused by an improvement of economies all over the world. China is still not in a very good position at the moment in terms of the economy, but we have seen that in Europe, the energy prices have come down and the economies are picking up. The economy in North America is doing extremely well, and this is all well beneficial for zinc.
Martin, there are various reports as well suggesting that the zinc prices can gain further from here. What's your own sense?
Well, we have seen quite low zinc prices in recent months, around $2,500 per ton. It has been picking up now. Zinc price currently is about $2,800, $2,900 per ton. It's going up because of stronger markets, despite the fact that zinc price is still not high enough for most producers to continue operation. We still see some curtailments of mines in Europe and in North America, and I think we need a little bit higher prices now to reopen and restart these assets again. At the same time, we see a strong demand for zinc, particularly because of the energy transition. Zinc is running demand for solar PV panels, for wind energy, and zinc is also adopted in galvanized steels for electrical vehicles with the transformation in the auto market.
How are you looking at the kind of supplies that are available right now, Martin, globally? Because we do understand that we are still in a bit of a surplus in this year, lesser than what we were in the previous year. But how do you look at the supply and demand numbers for 2024?
Well, let me first say that India is the biggest producer of zinc. You have a lot of zinc mines. There is a big zinc smelter in India. But zinc supply and zinc production in the world is well divided. There are close to 60 countries in the world that are mining zinc. There are over 50 countries in the world that are smelting zinc. So we are really not depending on one or a few countries. And I think that's good for zinc, because in any country, the production can be picked up again when demand increases. It's a versatile production, so to say, with different players in the market and different countries being active.
Martin, also, how are you looking at the demand growth globally? As you said, India is in a bright spot right now. So India demand growth vis-a-vis the global demand growth, how are you reading those numbers?
There's still a huge potential for India to pick up on zinc use. The average use of zinc is about 4 kilograms per capita globally. China is way above that, but India is only about 0.5 kg per capita. To put that into perspective, if you compare India with China with a similar kind of population, you would see that the demand and use of zinc in China is about 10 times higher than in India. And that shows for me the great potential of zinc use in India. In terms of renewable energy, for example, a lot of things are going on in India with solar PV projects. And solar does need a lot of zinc to protect those steel supports from corrosion. So I think India is well positioned for a bigger increase in zinc use in these specific areas.
Martin, and very quickly, a final answer then. From half a kg of annual consumption, as you said, per capita is what India does. So if you look at a year-on-year growth in that sense, where do you see India then stand in the next 5 years, perhaps?
India would... I see a big pickup of zinc use in India, because it is needed to make our investments more durable, to make sure that the investments are protected, that steel is not corroded, so that we can make use of our cars longer by using zinc and protect them from corrosion. This awareness, this growth in awareness of protecting steel from corrosion by zinc is the biggest drive, I would say, for the use of zinc in India and pick up in the market.
Fair point that, Martin. Thank you so much for joining us. So clearly, demand growth is anticipated on the higher side, and Indian demand per capita is much lower versus the world. So this is a huge high up that India perhaps can see in case of zinc going forward. That's all the time that we have on Halftime Report. But stay tuned, because after the break, Business Lunch will take all the action forward.